Go to kfb.org or find us on Facebook and Twitter.
Welcome to Farm Factor. Up first today, Duane Towes visits with Tom Zacharias to talk about National Crop Insurance Services and the services they provide.
Tom, tell us a little bit about the organization and what you're about.
Our organization is a service company that works for the insurance companies that actually write the business. We don't actually sell policies or adjust claims, but we service those companies that do. We provide them loss adjustment research services, we do training and education, and actuarial work, economic analysis for the companies.
When we think about crop insurance, it's well known that its importance to producers is well established in providing that safety net, if you will, to allow producers, should a catastrophe happen, that they have a chance to grow again the next year.
Absolutely. Nationwide, there's probably about 80 to or 85% of the acres have some form of crop insurance on them. Coverage levels are in excess of 70%, so high deductibles, again, nationwide. And part of that is because of the support crop insurance has received from both the House and Senate agricultural committees through the Farm Bill over the years, and has provided that level of support and risk management for America farmers.
There is a component, though, of that, that it's kind of a three-pronged approach. The producers paying premiums, it's supported by government programs as well, and then you've got independent companies that actually make it happen.
Yeah, absolutely. The three-way cross-sharing in crop insurance, I think, is one thing that makes it a very compelling and good policy choices for all that involved, American taxpayer, farmers, and U.S. government. You're absolutely right. Government helps contribute to support part of the farmer's premiums. Companies are on loss adjustment and expenses to deliver the program. And the farmers, they pay a portion of the program. Last year or this year, probably $3.6 billion in farmer paid premium. And then also it's important to note that with these policies, that those 70% coverage levels are higher, farmers are absorbing that portion of the loss before they receive an indemnity. So there's a lot of cost sharing on the farmer's part.
Well, certainly it allows for everybody to have skin in the game, so to speak, and it's in everyone's best interest to make that program then successful.
Absolutely. Again, at the end of this year, we're hopeful in that regard, hopeful for the American farmer. That said, crop insurance does has its own underlying legislation, and if that doesn't be the case, farmers will still have crop insurance available in 19.
We think about the variety of options out there. The industry has been pretty responsive to the needs of the growers.
There's a lot of new products out there and a good suite of products. They can protect just their yields. There's revenue coverage, which is extremely popular in the Midwest. There's whole farm protection coverages, and now, starting just at the end of this year, dairy revenue protection, which is new on the scene, which will expand farmers' capacity to absorb that risk.
Our thanks to Tom Zacharias with National Crop Insurance Services joining us on Ag AM in Kansas. Jamie, we'll send it back to you.
Thanks, Duane. We'll be right back after these messages for this week's Kansas Soybean Update.
To see this show and past episodes of Ag AM in Kansas, go online to agaminkansas.com.
Kim Mannering with Hardy Insurance. Today we will talk about employee safety and work comp coverage. On your farm, do you ask your friends to come help? Are they considered employees or neighbors helping neighbors? Did you know that you can be held responsible just as if it's a work comp accident? Give me a call. We can discuss. 316-945-6733.